All right, welcome back to the channel, Crypto Trend Trader, with our Friday weekly market wrap up. It is 3:30 p.m. on Friday Eastern Standard Time. Before we get started, I'd like to remind you it's not financial advice. I'm not your financial advisor. These markets are extremely volatile, so please do your own research and trade responsibly. All right, so like we expected, quite a bit of volatility. Since we spoke last on Wednesday. So just looking at the 10 year. We'll just run right down the line. Going to keep it relatively short today. Looking at that 10 year, we got the literal exact move that I spoke about. We came down and touched the diagonal and the Fibonacci line perfectly. That's what we want to see basically hold, is this consistent white trend line that we've been bouncing off. It's basically the bottom of the channel we were operating in. We had a nice little push out of the top right here. Expected a consolidation, and now that consolidation has basically just gone sideways long enough to touch us here, and it's gotten a very aggressive move off of that. So that's what we want to see. We want to see this this candle right here specifically. I look at as a rejection of lower yields or lower prices or just lower price action. So we very clearly had a push down to the downside, tagged some very key support down here, the Fibonacci line as well as the trend line of the channel, and then that got aggressively bought back up. If you look here, it bottomed out at 1.47 and it's all the way back at 1.58 now. So that is a pretty big move in yields and pretty aggressive rejection of lower prices or lower yields, which again is bullish. So I'm expecting still maybe a little chop around in this area, but now typically after a strong rejection like that, you'll see continuation in the direction of the predominant trend, or in this case, higher yields. So just jumping over real quick to the dollar here. Now this is obviously the opposite of what we're seeing in yields. This is like a new low on our push down here. Very aggressive move to the downside, and extremely bearish looking. At this point in time, it's hard to argue that we have not broken out the bottom of the range. It sort of looks like we broke out the bottom, came back up, attempted to regain that support, and then failed miserably. And now we're getting a powerful move back to the downside. Now again, the key levels that we're looking for, the most important level we're looking for, is essentially at this point in time a close below, basically below 90 or 89.9. If we take out this low right here, it's going to look like we're essentially going to come back down and at least retest this low right here, if not take it out. So it looks like right now that 89.2 is in the cards. Now it's only another 1% to the downside, or 1 to the downside on this scale. To the basket of currencies, but essentially at this point in time, that weakness is going to show us that we're more than likely going to get the measure move of the pattern that we were operating inside of. So this to me looks like essentially we got the breakout from the channel. We failed to get the full measured move. Basically underperformed. It was an underperforming like dead cat bounce. And now it looks like we're going to get that continuation. So this is, in my opinion, the dollar looks extremely bearish right now. Now, again, that could turn around. We find support. This gets bought up before the close this week. There's a lot of things that can happen here. And again, being the weekly close, we can kind of look at our weekly chart. I'm going to turn off the drawing tools here. And essentially what it looks like is, we're having a powerful move to the downside, attempted to break back to the upside, got rejected. And now, obviously very bearish looking week here, especially off that rejection. It could have easily turned back around and kept going to the upside, but now it's looking very clearly like we're coming back down. And if you look at on the weekly right here, if we close exactly where we're at right now, we'll have taken out this low right here. But then when you look at it on the weekly scale, this is very clearly a low. This is very clearly a high. And then, essentially this could still be a higher low. So again, if we don't come down and take out 89.9, I would still be potentially bullish on this, at least in the short term. But if we close at any point in time on a weekly below 89.9, it's going to look extremely bearish. It's going to look like a new low, and we're going to look like more continuation. And again, we're about to get the cross between the blue and the purple right here. Very clearly have been rolling over on the histogram here. We are still above our slope line, and it's very possible at some point in time we regain this, but at this point in time it looks more than likely that we're going to come back down here and at least challenge the lows again. So I'm going to rip through tech just while we're at it. And then we can go from there. Tech is obviously the talk of the town after the index had a nice move here. But let's look at Tesla. What's Tesla showing us? Well, from our candle closes on the daily here, we have very clearly broken down from that range here. And, it looks like we're going to get continuation to the downside. We topped out exactly where I expected. We could have found support down here at the bottom of the channel, but it looks more than likely like that is not happening. Here, this looks to me, this daily candle looks like a rejection of higher prices, a rejection to reclaim our support area. And more than likely now, we will get the continuation or the breakdown of this pattern, which just to do like the, basic measure move or like a rather conservative measure move breakdown, would essentially take us the width of the actual channel itself to the downside, which would essentially be a retest, depending when we get there, of that breakdown. So it's not unrealistic at this point in time to think that Tesla is coming back down to retest this low. And now you can see how this chart is essentially doing the exact same thing as the DXY. This is the same as what we're looking at on the DXY. From this little like breakdown channel down here, we attempted to get a breakout back to the upside, a bullish move on an overall bearish trend. That move underperformed, in this case, much more performance than we got on the DXY. And now here we've come back down to the bottom of the channel. And now here it looks like we're getting ready to break out of the bottom of the channel. So again, you're seeing the similarities stacking up all over the place between some of these different charts. But at this point in time, Tesla looks like it's going to be coming back down here to that 530 range to retest those lows. NEO, tried to get a bullish move back up here. It's headed back down to our flat bottom horizontal support line at 34. We are starting to see a little bit of strength here on the slope, but we've gotten the hard sell once again, the cross back to the downside. Again, it looks like we're more than likely going to get retest of the downward. I mean, more than likely we're going to break down from this channel or from this pattern in the very near future and get one of these like measure moves to play out here. This was like our rather conservative measure move from that previous Fibonacci level breakdown. This is obviously the measure move of the actual pattern itself and what we would expect. So Alibaba looks like it's basically breaking down from a long time support line. Tried to reclaim it, sold back off again. It looks like it just failed to reclaim a support line. We do see the slope line is flipping over to the bullish side right here, but everything else is angled down, pointing down and showing weakness. Breaking down from support looks more than likely like we're going to get that measure move, which is going to take us down to like that 175 range that we've been discussing. Baidu, just basically coming back down to retest that same trend line that Alibaba failed to find support on. We got multiple trend lines and Fibonacci's all coming into place, retesting the bottom of the range. Again, overall looks bearish, but we could still see some kind of like support off this area. Apple, we found that initial bounce off of our little trend line right here. This one has been performing a little bit better than most of the tech sector. But again, we bounced up, got a nice little move to the upside, and then sold back off. Maybe we're just coming back down to close the gap. Maybe you can take the trade off this area back to, previous all-time high or new all-time highs. But at this point in time, although this is one of the more bullish tech sectors, I'm not running to get back into a position there. Pinterest, after that massive gap down, lost support just like we were expecting, sold back off violently. It's now below the 200 exponential, it's now below 200 simple, and the slope line is basically horizontal on these. So if we stay below it much longer, they're going to be curved to the downside, and this thing will be, in my opinion, in an overall bear market. You could argue that technically, it was like in a bear market or recession already. I mean, it's down, right now like 34% from the all-time high. So this thing looks absolutely horrible. And again, this candle right here, this is that rejection of higher prices. We're seeing the same thing on the bond market, 10-year yields, with the rejection of lower prices. So when you see an aggressive rejection like that, pushing back in the opposite direction, it's typically going to be a top, or in the case of the yields, that aggressive rejection of the lower prices at the bottom or the lower yields tells us it's more than likely going to reverse and move back to the upside. So on Pinterest, still looks absolutely horrible, and closing at a new weekly low. I expect this thing to continue selling off and continue to go lower. Etsy, Etsy once again same exact thing. We spoke about this ahead of time. We spoke about the breakdown from the horizontal support. We spoke then afterwards on this candle right here, how that was basically a rejection to reclaim the support. And at that point in time, I expected the measure move. Here in the last 2 days, we basically got a massive gap down the majority of the measure move. We could still see continuation to the downside. We are now once again below the 200 exponential and simple moving averages in the bearish control zone, showing all red on the histogram. But we did leave behind a gap. So is it possible we come back up to like 185, fill that gap before continuation to the downside? Definitely likely. More likely than not, in my opinion. Also, we saw this massive spike of volume, so I don't think it's unrealistic to think this thing could move back to the upside. But at this point in time, we've lost key support. We're below key moving averages. So if we move back up here to close this gap, I think more than likely we'd see a big wick left behind and a rejection, or a gap up followed by just steady selling back to the downside. As once again, Etsy is extremely bearish. Extremely bearish. Terrible weekly close too from tech. As individual stocks, not necessarily the index. We'll get there in a minute. Zoom, once again, absolutely horrible. Tried to get a bounce, got rejected. Essentially, we just lost this support area, retested it as resistance. It got rejected as resistance. So again, this trade still looks good to me. That 270 area for a long back to the upside. Nice little move. We'll see how it plays out. But once again, looks terrible. Terrible weekly close. SMH, semiconductor ETF. This thing is basically, again, rejection of lower prices, support off the 89. Looks like a good buying area. Got a nice little move back to the upside since then. Run into a little resistance on the moving averages. We are paying attention to our little, support to act as resistance if we get back up to it. But again, these markets are often going to tell us what's going to happen in the overall market ahead of time. This looks like a bullish reset to me. I expect further upside on semiconductors, at least the ETF. But again, we'll pay attention to price action and see how it plays out in time. Peloton still looks absolutely horrible. I expect further continuation to the downside. We lost a key level. We have a very clear head and shoulders pattern that we were pointing out development, and expect continuation to the downside. Tried to get like a gap up back to retest as resistance, and it sold off violently. And literally, there's like lawsuits, recalls. This thing was arguably overpriced to begin with. Exercise bikes and equipment tend to overall be like little like boom bust cycles as they get like popular and trendy and people buy into them. They get overvalued the same way like NordicTrack and like all these other ones did in the past. And then eventually a little bubble pops. And, most of these companies get just absolutely thrashed. So is it unrealistic to think this thing could still lose a massive amount of value? No, not at all. This thing could get crushed depending on how many more people die, how bad the recalls go. There's tons of fundamentals and technicals, and they're all pointing in the same direction, and that direction is down. Peloton looks like death. Oh, probably shouldn't have said that. Looks like crap. Walmart, we got the breakout of our descending broadening wedge. Some of the move back to the upside to close our gap. But again, I'm still neutral on Walmart. I mean, you could easily take a buy from this area on a confirmed breakout and expect continuation to new all-time highs. I don't think you're crazy. But does that trade play out to the upside before it plays out to the downside? I'm honestly not sure. I still think we could come up here, fill this gap, and then sell back off, or easily continue to the upside. Overall, long-term bullish on Walmart. We did get the hard buy. We are above the slope line. It is sloped to the upside. A lot of stuff pointing Walmart to the upside. Save the 200 exponential and simple moving averages. Does not seem unlikely that we would be right back at like 150 or new all-time highs, very soon. At which point in time, obviously, this looks like the trade to take. But again, I wouldn't put it past the market to come back up here to like 145 and then see continuation to the downside. ARK, this is the ARKK innovation. Once again, doing exactly what I said. All the ARK funds are complete underperformers. Could not even get up above the 1.5. I'd like to see us at least get to the 1.618. Got completely rejected off that area. Sold down below 200 exponential and simple. Are we seeing a trend here specifically in tech below the 200 moving averages? A lot of these overperformers during the pandemic are now underperformers coming out of it. I expect that, if the trend continues, which right now the trend in tech is to get out you know, these things are going to start selling off heavy and taking massive hits. As you know, this one specifically came up from 32 bucks in a very short period of time up to $158. It's already lost $50 of that value. I mean, it's down like 33%. Is it unrealistic to think that this thing like sells off like massively? I mean, could we see ARK at 70 bucks or 60 bucks? Yeah, definitely could. We definitely could. Matter of fact, 60 would be a great buying area. I would be super bullish on buying ARK at 60 bucks. Which I was super bullish on buying ARK way back in the day before it was like the trendy trade. But once again, you know, typically what happens with these funds, with these like, you know, one-hit wonders is they get really popular, they get real trendy, they get a lot of publicity, everybody buys into it, everybody invests in these funds, they start irresponsibly deploying capital into like random stuff, recklessly buying up huge portions of the same companies because they can't find value in creative new places, which is what you see with the brand new ARK fund. The Space Innovation ARK fund has like nothing to do with space. The stuff that they were investing in is ridiculous. Massive buys into Coinbase, which has done nothing but sell off massively since then. So, you know, in my opinion, Cathie Wood is in far over her head. You know, we're just going to see continued massive outflows from her funds. And, you know, probably you know, she's probably just going to be one of those one-hit wonders, in my opinion. But again, enough on Cathie, enough on the ARK funds. They are going down fast. And if this thing breaks down, which it's about to get the lowest weekly close now, you know, we can take a look at some of these weeklies. We're about to get the lowest weekly close unless this thing just like jumps up all of a sudden to like 113 bucks. So unless it has like a quick 4% move in the next hour or so, I expect this to be our lowest weekly close, a confirmed breakdown from support. And, you know, at that point in time, our next target after the 236 is going to be the 382. So, you know, we're looking at like 88 bucks on this thing and probably quick. Probably quick. We're getting the weekly 821 cross to the downside right here. We have a very clear hard sell out of the top of the range, leaving the bullish control zone. We now have flipped the slope over red. We're getting all red histograms. This thing looks like shit. ARK looks like shit. Yeah, so is it possible we save the 821, move this back to the upside, consolidate, and I change my mind? 100%, for sure, it's definitely possible. But right now, it looks like Cathie Wood is getting absolutely dumped on by the markets. So, yeah. Okay, so Dow Jones next, new all-time highs, massive continuation. You know, we talked about the pattern, we talked about the break, the confirmation, the retest of support, the hold right here, and now here we are. You know, basically, this price action right here tells me that we're gaining strength every candle that goes by. So this is going to go parabolic. The two things that we talk about all the time are basically like the way these things can happen. So there's like two basic like patterns. There's one like this, and there's one like this. So this one shows that we had like a breakout and that we're like losing strength but still moving to the upside. This one shows that, you know, we've had a breakout and we're gaining strength continually. So this is like the first one right here. You know, we see we get like a nice solid breakout, and then each candle is like progressively smaller, and then we kind of top out and roll back over, find support, and then just kind of float up from there. This is the second example. This is where you break out from a range, you know, retest, and then you start to just gain strength, gain strength, gain strength. So what am I expecting now? I think next week's or the next day's candle in this series is just going to be more powerful than the one before it, and I think more likely than not, we're going to continue seeing that. We're just going to continue seeing stronger and stronger candles in this market. So, you know, whatever the couple days, like 5 days of this week look like, I think the next 5 days are just going to be even bigger gains. I don't think it's unrealistic to think that, you know, next week we could be at like 36,000 on the Dow. I mean, even if we say 35 and a half, I mean, this thing, it looks like it's literally just about to go parabolic. And maybe that's the blow off top and that's the end of the cycle, maybe. But again, I'm not getting bearish on these things until I have a reason to. And there's no reason to be bearish on the stock market right now. There's no reason to be bearish on the stock market. Once again, same thing. What did I say? This whole entire phase up here looks to me like a bullish consolidation. We're just resetting the indicator oscillator. We're at the area you would expect to see a bounce and some strength, breaking to new all-time highs. Again, continuation to the upside. Tech, IXIC, NASDAQ, we're seeing the opposite from tech. It's obviously like weaker than everything else is. But again, this is an ascending triangle. It's a bullish pattern. You could call it a double top. Maybe you're right if we sell off from here. But right now, it's a bullish pattern to me. It's an ascending triangle. It looks bullish. We're putting in a low, a higher low, and now here, another higher low. The next thing we're going to do is, we could retest this low a little more clearly, retest 89 a little more clearly, but eventually I think we'll make our way back up to the all-time high and eventually get that break. And when we do, we're going to get that measure move break of the previous all-time high. And what's that going to be? Depending on how you want to do it, the conservative way to do the measure move for this pattern is, just the distance from the top of the pattern to the bottom of the pattern or vice versa, which, that has tech up at 15,723. So, we're at 13.7 right now. Is it unrealistic to think, that we're going to get a nice, powerful move back up here, another 14%? No, not at all. I think tech was overperforming for a little while and it had to cool off. And now it's putting in a bullish pattern at its all-time high. And I think it's getting ready to break to new all-time highs. It might take a couple weeks. Might happen next week. Might happen in a month. But looks good. Russell 2000. This is what we're talking about. Potentially a, bearish pattern unfolding here. Head and shoulders. This is, in my opinion, I'm still more bullish on tech mid to long term. Less bullish on Russell 2000. Although these are like big companies, they're not the big companies that matter, like Apple and Amazon and Google and all that stuff. So overall, I would say I'm the least bullish or the most bearish on the Russell 2000, but we did find support where we would expect to or want to off of this support line, putting in a series of higher highs and higher lows, higher high, higher low. So if this comes back up here, takes out this previous high right here, it's going to no longer be an internal retracement. We'll retest the previous all-time highs, and I would expect continuation to the upside. But there is still a very high likelihood that this could easily break to the downside as well. So again, not overly bullish on this one and least bullish overall in comparison to the other indexes. So XLE, energy, back at the all-time highs again. Obviously, this was a trade to have as it was a breakout of the range in a predominantly bearish pattern. But once again, extremely bullish on energy, short and long term. We could easily top back out here and cool back off, but I would just expect this honestly to find support at a higher level and then see continuation. But once again, I don't think it's a bad idea to take profits at the previous all-time highs, but I think we're going higher. We can switch this over to the ICLN next. ICLN, clean energy, basically, it's trying to get back above that low, trying to move back up. Broke down technically from it. It's back up retesting it. Based on, what we'd expect to happen here. Typically, when you come back up for the retest, you break down from it and you're going to get rejection, continuation back to the downside and, to one of these, more juicy buying targets. I think there's a very high likelihood we'll be back down like 19.75, $20 in the very near future. But I'll be looking to take on positions at these key fib levels. So there we have that. That is our... Just clean this back up a little bit. So getting ready to close out that weekly here. Overall, seeing strength in the indexes, weakness in tech. Let's talk about gold first. Gold is looking nice and good. We got the breakout of the channel, retested it for support. Looked extremely good right here. Looks like we found support. We're back up fighting with the 200. We got above the 200 exponential moving average right here. Got the move up to the 200 simple moving average. We're now getting ready to test that purple trend line resistance up here. Overall, I would expect the measure move to play out and take us back up to 1950. At 1950 though, we have essentially what will look like a triple top right there. If we break above that, we're going to new all-time highs. You know, I already think that we're probably headed up to new all-time highs right now, but you'll see the knife is extremely high levels right there. We did just sell off out of the bullish control zone, and it looks like we're about to get the cross again. So if we got rejected right around this level and rolled back over, I would be looking for us to at least stay above 1677, but the initial support area I'd be looking for is like 1767. But again, very bullish on gold long term, especially while everybody is worried about inflation. Although I don't think inflation is going to be our problem in like the mid to long term, short term, I think we're definitely going to continue seeing price inflation due to supply constraints and also elevated or at least continued demand with lack of supply. Silver got the breakout, a little less aggressive right here, still above 200 exponential and simple, still slightly more bullish than gold overall. Looks good, you know, but again, with silver, the main areas we're paying attention to are, you know, that bottom down here at 22.50 and the top at 30 bucks. You know, with silver, I'm looking to get out of basically a horizontal channel. So, you know, I need to see a little more price action on this. The second we do break out and close above 30 bucks, I think we're going to like 35, 36 immediately, which, you know, that's like a 20% move, like pretty quickly, which point in time, I think it's very safe to assume that, you know, $50 will be right around the corner. I mean, if we can break above this 30 bucks, you know, I think it's like 35, 42, 50, you know, and then at that point in time, you know, once we come back up and retest 50, I think we'll be at 90 almost, you know, quicker than anyone expects. And then after that, I mean, the sky is the limit. You guys have seen my targets up as high as $500 on silver, which sounds crazy now, but I'm telling you, a lot of stuff pointing up to, you know, triple digit silver, even if it's $100 silver. Gold to silver ratio, you know, we've got like a breakout that would imply that we're going to get a move to the upside where gold strengthens in comparison to silver or silver weakens in comparison to gold. But since the breakout, all we've done is sell back off to that level from the breakout. So is it possible that this just continues to like basically underperform, rolls back over and continues to the downside? Very possible, very likely, at which point in time, you know, I would be looking for something a little more similar to this. Like, I mean, basically like, you know, a resistance more like this type of thing. So we'll have to see how it all plays out. Theoretically though, you know, we did break out of the range and I would expect to see continuation to the upside. But once again, you know, we're seeing some clear resistance here at what's, you know, basically potentially the top of the range. And we've already seen the move take out. You know, from here, it's just going to play out back to the downside. So we'll have to see how that works out. Platinum is next. Platinum showing quite a bit of strength. You know, we're obviously inside of a very large channel moving to the upside. I'm extremely bullish on platinum for prices up closer to like $2,000 in the very near future. This one is maybe looking the most juicy short term of all the precious metals. Well, I shouldn't say that. I mean, well, depending, precious, industrial, whatever. Copper and platinum both look phenomenal right now for continuation to the upside. Platinum is basically at the top of its little mini channel right here. At some point in time, you know, we're either going to continue inside this channel and break back down to the downside and we'll have another buying opportunity, or eventually we're going to get the break, which, you know, in this case, the break of the platinum channel would just take us, you know, once again, the distance of the channel back to the upside, you know, at which point in time we would be taking out like this cycle high. And I would expect like basically our, you know, our potential like wave 5 to play out, which, you know, if you haven't looked at it before, once we took out the top of that wave 3, this would essentially be the bottom of wave 4. And then, you know, our top of the wave 5 target is way up here at like 2000, which again, combination of some Fibonacci's, Elliott wave, and essentially like a trend cycle. So, and then if we check out, let's see, URA, uranium next, new high on that thing, broke above that key fib level. You know, this looks very strong. Looks like we're going to get continuation to the upside. URA. Some of the other uranium stocks don't look quite as promising. What the hell is going on? UEC, Uranium Energy Corp, doesn't look bad. Did not take out that high quite yet, but showing a bunch of strength. Crossed the 821 back to the upside. Back inside the bullish control zone. Nothing but green histograms. Getting ready to flip that slope back over to the upside. Looks good. USAS, American Gold and Silver Corp. This is like gold and silver miner. This thing still looks very bearish in comparison to the underlying assets. Gold essentially has broken back above this channel, back above support, and back above like our top area of resistance, as where like this USAS is it's much more bearish looking. And then silver obviously is even more bullish looking than gold. So still underneath 200 exponential and simple moving average. Hit our buy zone back down here at $2. It is possible we see continuation to the downside in correlation with the underlying assets. But at this point in time, this thing looks like it's probably going to head back up to like $3 in the near future. So definitely looking at this as a potential accumulation or buying opportunity. But again, these precious metals could easily just turn back around to the downside and fail to like change around the predominant trend. I don't want to get like overly bullish on these things, but they're starting to look very clear. This is what I was talking about on Silver Junior SILJ. I wanted to see a weekly close and confirm breakout of that range right there. And, that's what we're looking at now. This is what we're looking at. We have gotten continual rejections on the weekly outside of that range. Every time we broke out of it, we gapped up and then sold back inside of it, gapped up, sold back inside of it, got a hard rejection. And now here we are, closed outside of that range. So, at this point in time, the Silver Juniors look, this SILJ ETF of the juniors looks extremely bullish. More bullish than I would say probably gold and silver look at this point in time. So if these junior miners are any indication of what's about to happen, gold and silver probably going much higher very soon. So THCX is next. Cannabis ETF overall looks decent. Lost obviously 70 cents, 65 cents in the post market, gapped back down. But overall looks like it's starting to base out. Still above 200 exponential and simple, but looked like these were going to turn around and start showing some strength, and then came back down to the bottom. Got the hard buy signal at a bearish control zone for the second time now, but we are losing strength on all this stuff. At a key area, we would expect to find resistance, but overall, still very bearish, bullish on these. YOLO, another cannabis ETF. This one looks slightly more bullish. Put in a clearly higher low. Hard buy signal coming out of the bearish control zone. About to get that cross once again. This looks even more juicy. If it looked juicy back here, it looks even more juicy to me right now. Looks like we basically got the break of the wedge. And now we're going to, basically came back down, found support, and we're going to see that continuation to the upside. My target's not changing for basically a retest of this previous high. But, shorter term target, we could have a retest of like that 24.35. But looks extremely good. Looks like we're getting ready to turn back around. Still a little early to tell. We could easily sell back off, but starting to look very good. Tilray, had a nice pushback down here. Great opportunity to buy more at $14.50 in my opinion. Took out the low, which is slightly bearish, but overall, I'm very bullish on Tilray long term. We're inside of essentially my buying zone and where I'm looking to accumulate at. But once again, we could see this thing sell back down to like $10-11, and I would still be bullish on it and looking to accumulate. But right now, where it's sitting at, we may not see lower lows on this thing, but at the same time, I'm not ready to go like hardcore all in on this. If there's potential for like still another like 30% drawdown. Not that I would go all in anyway, but ACB, Aurora Cannabis. This one showed a little more strength over the last couple days, but overall much weaker than the space. It did get down here to like 750. Didn't sell off nearly as much with this little recent push down here. Maintaining a little bit better, but overall much more bearish or less bullish than the space. But we did get the daily divergence signal right here, which is like a hard buy for me. When we get the hard buy followed by the hard sell, followed by the hard buy in the bearish control zone, that to me is one of the most powerful signals, and is typically a divergence signal at the bottom of the range when we get that sell, like especially like tightly wrapped up with the buys. And you'll notice we got like a little looser of a signal back here. It actually sold off slightly more, and then we got that massive move back to the upside, which from the bottom to the top right there was 275% off of what I call this, this bullish signal. So, this bullish signal right here, are we going to get another 275% move to the upside? I mean, I don't know, but would you be happy with 100%? Back up to like 20 bucks, retest this high right here? I know I would be. So, once again, not financial advice. I'm not your financial advisor. These markets are extremely volatile. Please do your own research, trade responsibly. Caterpillar, exactly like we talked about. There's potential that we would get the breakdown here. I don't want this arrow to throw you off to think that I thought we were going to sell off. I did not. I put this arrow here specifically showing like the measure move of the channel, but the actual trade here on this one, the trade that I was interested in is the trade to the upside, which is obviously a long off of the support that we've tested over and over again. We have a very clear blue support line here. Every time we touch that support, if you bought it, there was massive continuation to the upside. Every time you sold the resistance, you got a much better buying opportunity in the near future. So once again, I expect that move to the upside, and I'm going to continue to buy the blue support line in an overall predominantly bullish uptrend, and Caterpillar fundamentally and technically extremely bullish. Bitcoin, this one is the Kraken chart right here. Basically, I mean, looking at the daily here on this one, we are getting some mixed signals. We're getting the buy. We got the cross. We got a bunch of green histograms in a row. We're getting the 821 cross back to the upside. This looks good to me. Typically going into the weekend, we'll get bullish continuation as well. We basically we had a little bit of mixed price action right here. This was obviously extremely bullish. This was obviously extremely bearish, but it was followed once again by an even more bullish candle, followed by a bearish retest of the 821 cross, followed by an even more bullish candle. So overall, I think Bitcoin looks bullish, at least for that retest to come back up and close the gap on futures, at which point in time, maybe I'll reevaluate. But, we have basically crossed this red slope line to the downside way back here, basically, March 24th. So, been going sideways, chopping. Bullish reset as far as I'm concerned on the daily. Weekly, we're just closing back at the all-time highs basically on the weekly. Got to be careful. We did exit the bullish control zone. We are still crossed to the downside. We do still have week after week after week of, red histograms selling off here. So, we're seeing a lot of weakness at the top of the trend, but overall, doesn't look terrible to me. I mean, I wouldn't put it past Bitcoin to just consolidate here, maybe get one more retest to the downside of like that 21 weekly, and then see massive continuation to the upside. But, this is what we've been talking about, what we've been wanting, what we've been expecting was a retest of the 21. As far as I'm concerned, it just got slightly front run. Not unrealistic to think we're not going to come back down here and touch it or even wick down below it and get bought back up. But if we don't close below the weekly 21, there's no reason whatsoever to be bearish in this market. We're closing at the previous all-time highs basically on the weekly, just eating through these sell orders. It's just a matter of time before we burst back to the upside, assuming we don't sell off. And then Bitcoin chart on stamp, just a couple different indicator oscillators here. Seeing a little less like bullishness here. The Fisher looks okay. We're continuing back to the upside. It basically nailed the bottom. We could top out here anywhere. I wouldn't put it past it. We're seeing weak volume overall, but it is bullish. If we look at the on balance volume, we're sort of bouncing that slope line, seeing a little bit more movement to the upside. But typically, in the powerful moves, we consolidate at the slope line and then don't come back near it for a while. So this is all just consolidation right here. So maybe we're starting to like burst to the upside and we're not going to come near it again, but we'll have to see. We will have to see. There's definitely potential still for upside or downside based on these oscillators. Once again, we're seeing weakness on the Fisher on the weekly. We're seeing weakness based on volume, on the waddah explosion. Slope line is yellow on the weekly. We're not seeing any kind of volume come in like we were seeing with this positive volume here. We're also not seeing even close to what we saw on that negative sell-off right there. So, based on the weekly, and again, we're retesting that slope line once again. The weekly still looks, like sideways to bearish, but the daily has essentially like reset at this point in time and looks bullish again. So, but again, we'll have to see. Futures, getting ready to close at or above, the previous little high right here. So once again, I still expect futures to come up here and try to fill this gap between like 60,000 and 62,000 range. I would not be surprised to see this pushback to the upside, fail, close the gap, and then sell back off. But I mean, I'm not going to get bearish on this when we're crossing the 821 back to the upside, getting ready to close this daily back above it. Hard buy signal, multiple green histograms. It looks like we're going up. I mean, at this point in time, 60 to 62,000 looks extremely probable in the next like week or two. Looking at the weekly futures chart, once again, slight front run of the 21 weekly, maintained inside of the bullish control zone. We do have the sell buy sell. So, I am a little bit cautious of that, as that is like our divergence signal at the top of the range. Multiple weeks of, bearish price action based on the histogram of the TJD, TDMACD. But, again, we're still above the 8 moving average. So until we start closing below the 8 moving average, I'm not going to get bearish on this on the weekly. But again, are we just coming back up here to fill this gap and then we're just going to roll back over? We got 2 weeks in a row already on the TJD. We'll have to see. I mean, the parabolic SAR, the last time we got our consolidation on the parabolic SAR, we saw the red signal flash. We got 3 weeks and then continuation to the upside. So do we get 2 or 3 weeks and then continuation to the upside? Probably. I mean, based on probability, that was 3 weeks back here. We've already had 2. So, and this was what, about 7 weeks right here. This was, a couple months right here. So, if we see anything over 3 weeks, I might get worried that we're going to get a longer consolidation period. But at this point in time, once again, I'm neutral to bearish maybe on the weekly. But on the daily, I'm still bullish. Everything still looks bullish on the weekly. Matter of fact, it just looks like a bullish reset. Doggy Dogecoin, XDG. Rejection of lower prices, wick after wick after wick after wick after wick. I mean, so until we break down and close at least a 4-hour, let alone a daily below like 57 cents, I'm still bullish on this thing. So I'm on a shorter time frame though. So let me switch over and we can take a look. We're at a key level we would expect to bounce, but we could easily lose this level. But again, I think this is just a run up in anticipation of Uncle Elon putting out a tweet storm or mentioning Doge on Saturday Night Live or whatever. After that, what do I think happens? Probably just a reflex sell-off. I think this was the pump leading up to Saturday Night Live. We may even see further price action up to like, $1 in anticipation of Elon on Saturday Night Live. But I mean, it's tomorrow night. So, if it's going to run up, it's going to be from now until then. But there's nothing bearish on this chart whatsoever. I mean, once again, we got the hard buy right here, the same way we got the hard buy right here, same way we got the hard buy right here. Every time we've gotten the hard buy, we've saw hundreds of percentage moves to the upside, typically, 4 to like 16 X's. So all green histograms, slope line to the upside, hard buy signal, bullish control zone. I mean, look, you guys know how I feel about calling tops and bottoms. We're at the 3.618. We hit the target. Could we sell off from this level? Sure. But I'm not going to be the guy who tries to call the top during a bull run that could last for years. I'm not going to do it. I'm not going to try to pick the exact day that we top out when all we're doing is pumping up. I would rather just say, more than likely, we're going to continue going higher. And then once that day comes, trust me, I will let you guys know. But until then, bullish. Ethereum consolidating at all-time highs. Still bullish on this. We did break down below and lost the slope line on the TJD, TDMACD 4-hour. We did get the hard sell out of the bullish control zone. We're putting in clear divergence on Ethereum from this level to essentially like where we're at now. So this is bearish divergence on the 4-hour. Is it likely we're just going to sell off here soon? Yeah, probably. Probably. At least some kind of sell-off. But overall, massively bullish in the uptrend. We're bullish on the breakout of this pattern hit the measure move. We're still bullish, 821 across to the upside. We hit the 1.618. Next target is, 2.618. I mean, you guys know what it is. It's $4,329. Still looks good. Still looks good. Clearly inside the bullish control zone. All green histograms on the daily. No reason to get overly bearish on this. Cardano, new highs. We specifically spoke about it back here. There's no reason to not think we're not going to continue seeing new all-time highs. Or new highs. Yeah, I think that's all-time. Riot blockchain, broke down from support. I think this is just the premium coming out. Again, until Bitcoin starts putting in new all-time highs, it's not going to put in new all-time highs because there was a massive premium on this. It's a mining stock for Bitcoin. So if Bitcoin's just going sideways or down, this is not going to go up all of a sudden. So, what's going to keep happening? We're going to keep retesting these lows until we get the breakdown. And when we do get the breakdown, it's going to be nasty. It's going to be a nasty breakdown. Maybe we don't get the entire percentage breakdown. This is obviously on log scale. So when you start looking at percentage breakdowns, they can get a little unrealistic at times because the percentage breakdown on Riot would take it to, it would be negative. It would be negative. So this would be our percentage breakdown. I can go to a longer time frame, but I think you guys get the point. All that's basically saying is this thing could get absolutely crushed. But the truth is, I wouldn't expect it to break down like that. I would expect it to break down to another key support level. I would expect something like, even if it goes to $18 though, what are you going to lose? 50% of your value? Like, that sucks, man. We do not want to see this breakdown from this level, but it looks basically imminent at this point in time. How many times have we tested support? We're looking to get a new daily close low on this thing. Look, it looks terrible. It honestly looks terrible. It's more than likely going to lose like 50% of its value. Could Bitcoin just start moving to the upside though, and then this rallies? 100%. But it needs to do it during a weekday. If Bitcoin runs up all weekend, it's just going to gap up to another lower high and then sell back off again. Bitcoin needs to go to a new all-time high during the week while traditional markets are open. The premium needs to get absorbed by the additional price in Bitcoin underlying. Or else, in my opinion, things like Riot, things like MicroStrategy, which we'll look at now, and things like GBDC are just going to continue selling off. GBDC reached almost a 20% discount over buying underlying spot Bitcoin. So at what point in time does GBDC just sell their own stock and go buy Bitcoin? It's absolutely, sell their Bitcoin and go buy back their own stock. But honestly, I can't remember. I can't remember if they're allowed to actually do that. Because I know they're backed like 1-to-1 dollars to Bitcoin, I believe, but I'm not sure if they can actually sell Bitcoin. But theoretically, all you would do is you would just play the arbitrage on that. You would literally sell some of the spot underlying Bitcoin and buy back some of the issues of stock. Therefore, the stock value would come back into line with the underlying asset value. So there's obviously something at 20%, there's obviously something restricting it. So I think that they're actually restricted from being able to buy it. So I think they basically have to wait for eventually somebody else to close the arbitrage for them, or else theoretically they could just go out. I would think that they would literally just get funding and then buy back GBDC stock until it comes back in line. But again, I would have to really look into it the same way I would have to look into the premium on MicroStrategy and see like how much more is this going to sell off before literally the Bitcoin that they own as a company on their balance sheet is worth more than the premium or discount on their stock. Because this, it's the same thing again. Eventually Bitcoin either has to go higher or MicroStrategy has to buy back their own stock until it comes back in line, because it's basically just a fake ETF, which is the same thing as what GBDC is, as opposed to Riot, which has to do with like mining of Bitcoin. But then here we are back at Coinbase. Coinbase hit our target. The 2.618 was our target, $255. I said we would probably go to 250 because it's a nice round number. We hit 250 exactly. in my opinion, if you like Coinbase, that's your buying opportunity. You know, are you afraid to buy at 260 if 250 looks good? No, you would expect to move back up to at least retest that breakdown and that clear swing at like 282. But I mean, that's a nice move right now. It's a nice, I mean, that's a 10% move back to the upside, but is it just going to move back up and then get rejected and then continue selling back off? I mean, which one is more likely to happen right now? To move back up and retest 280 and then get rejected, or to just straight sell back off and reach the 3.618 at 225? I mean, I don't know. How low is Coinbase going to go? I don't know. I would say 250 is probably a fair value on Coinbase. So, you know, maybe dabble around a little bit. I still haven't bought any yet. I don't plan on buying it. I would rather see it put in a base, have a retest, some kind of like aggressive buying come in, a nice little wick left behind. Right now, though, I mean, a bunch of bearish candles, one bullish one, continuation to the downside. Bunch of bearish candles, one bullish one, maybe two, continuation to the downside. So is one bullish candle all of a sudden going to make me want to buy a Coinbase? Well, last time you got wrecked, the time before that you got wrecked. I'm not going to be the one who gets wrecked this time. I'm sure plenty of other people are taking this opportunity. And again, there's probably a scalp to the upside for sure on Coinbase. I mean, not for sure, but it looks like there's a scalp back to at least retest the 8. But I would rather just wait for this to show strength, because to tell you the truth, we could very easily come back down to the 3.618 fib, and this thing just gets oversold to like 228. But I mean, we haven't even been able to get above the 8 on the daily moving average, which, I mean, obviously it's just populated. This thing just came to market. But yeah, I'm not that excited to buy Coinbase where I'm just like rushing in. So, I mean, I think we have our first weekly now though. But yeah, that's it for today. Just want to keep it relatively quick. Keep it about an hour. We're at 52 minutes right now. I'm going to jump over in the comments here real quick. Making a Crypto Millionaire says, hey, what's up, bro? Good to see you, my man. Can you please look at CRV? Yeah, we can take a look at CRV, man. And then Sticks Plus Drone says, good entry point for ETH. Wait for a pullback. I mean, there's been a lot of good entry points for ETH. Right now, to me, on the 4-hour, with triple bearish divergence, it looks like wait for a pullback. But again, I mean, we're basically at all-time highs, making new all-time highs regularly. The ETH to Bitcoin chart looks pretty good. You know, I'm not going to give you financial advice, but I'm not going to buy straight into like triple bearish divergence on the 4-hour. But on a daily, does that mean that if you bought now, you're going to go like way underwater? No, probably not. But on the 4-hour, if you look at that, there's probably going to be a very good entry in the very near future, and then continuation to the upside. Would you say CRV to USDT? Little tether? Yeah. Take a look at this bad boy. CRV to tether. I mean, you're just eating away at that sell wall, basically. You know, there's a clear sell wall right here, resistance, sell wall. Here we're at the sell wall again. Bullish price action leading up to it. Hard buy signal from the bearish control zone. You know, it looks like we're about to cross back over. Slope line's still blue. Mostly green histograms in a row right there. This looks good. Looks good. You know, we're getting dangerously close to that retest. Now, if we're on the weekly chart, the all-time high weekly close is 588. We're still at 380. But, I mean, once we took out this level right here, that 292, the next resistance was right here at 355. And then from 355, we basically have no weekly resistance. So, I think if we close this weekly, I mean, realistically, if we close this weekly above, you know, just to lay it out like nice and clear, because anything could happen over the weekend. I don't want to be like overly bullish on this thing right now, but basically the way I look at it is we have a clear support right here that we're above at 350. So if we stay above 350 on this weekly close, basically just over the weekend, it's going to look extremely bullish, at which point in time Our next resistance is going to be, basically $6, 5.89 or whatever on the weekly. So if we close at support right here or above support, I would expect an immediate, couple days or weekly move, 65% to the upside, back to retest that weekly close. And then if we close above that, the sky's the limit. You'll have some resistance along the way from like the daily or from this wick at like $24. Dear God, that's a wick. That's a wick right there. But, I don't even want to put the chart up here, but in all reality, oops. Hate when it does that. In all reality, it's not going to actually work. Hang on one sec. Put it. Oh, it's so funny. The log scale is like so insane on this thing. But I just set it ahead of time and then I'll move it into place. So it'll be a little more accurate. Because as you move it, it like expands like violently. Let's say we just took a long right now and we said, if we break down below this point right here, you could have a 15% stop would basically be taking out this key area, this close, this previous week close or the open of this week. It would basically say like, okay, we're going to bearishly sell off and this candle is going to turn red. That would tell us, okay, maybe we're wrong about this trade. We're back below support. We don't want to be in this anymore. We've got the hard sell and this is just divergence playing out. But the alternative, the flip side of that is, the potential long opportunity to the upside, which again, I just threw this on here. Assuming that we just have that as our stop loss 15% with our upside target of the previous high weekly close, that's going to be 53% to the upside or 15% to the downside. 3.5 risk reward ratio. Obviously, anything over 2 to 1, in my opinion, is a trade worth taking or a nice risk reward ratio or worth a shot. But, in the event that this thing just goes ape shit, let's say like the absolute, bullish situation would be it then closes the next week on top of that resistance. And then at which point in time, what would you expect? Well, you would expect it to retest the all-time high, which this may not be the actual all-time high. This might just be when it was listed on Binance. But just for that specific example, now you're looking at 15% risk for the entry to 513% reward, which is obviously like ridiculous. What is that? That's 34 to 1 risk reward. Now, am I saying we're going to get back up to $25 on this? No, not necessarily. Maybe not. Maybe we fall short. Maybe we sell back off. Maybe we hit a key fib level and retrace and that was it. And this thing never goes back to all-time highs. But what I'm saying is the risk reward ratio right now of 35 to 1 looks very likely. And if we get above this target right here at like $6, it looks very, very likely. So we're looking at not only risk reward, but also probability. So if the risk reward is 3.5 to 1 and the probability is 50%, well, statistically, you have to take that trade. You'd be an idiot not to. So if we look at the same thing and we say, okay, well, the risk reward on this thing going back to the all-time high, is 500%, and we're going to risk 15%, and that's a 34 to 1 risk reward. Well, even if this thing plays out 1 in 3, if it has a 33% chance to get back above there, if it closes above here, or from where it's at right now, or even say a 10%, if it has a 10% chance right now to go back to the all-time high, is it worth risking 15% to make 500%? That's, you'd be crazy not to take that trade, right? Or I would at least. But where are we at right now? Well, from that fib level to the bottom right here, we came back up. Where did that wick get rejected at? Got rejected exactly at the 618. So is there a viable argument that this has already topped out based on that wick rejection and that now it's going to roll over? Yeah, for sure. And if it takes out this weekly candle that we're in the middle of right now, that's where you get stopped out and then you reevaluate. But in my opinion, more likely than not, we're going to blow through the 618 we've already tagged. So the likelihood of double topping up there, less than likely. So that would lead me to believe that we're headed back up to $586, which leads me to believe that if we're going to go up there, we'll probably touch the key fib level up here, which is a 786. So maybe we're going to $9. But once again, the risk reward is phenomenal on that, and probability of success, in my opinion, is phenomenal as well. Seeing a little bit of mixed signals, but you would expect to see that at a key Fibonacci level after, massive parabolic move. But again, I don't want to get you too excited on CRV. It's obviously underperforming compared to the market, as it has still not taken out its all-time high. And, most cryptos have. Some of them have taken it out by 10, 20, 50, 100x. So is CRV still a shitcoin? For sure. But is there definitely some probability for like a massive move up here, or some serious success, or even if you just want to say like that, it's just a asymmetric trade right here, like the risk of 20% for a reward of 500%. I mean, pretty damn good to me. Yeah, for sure, brother, for sure. Good to see you guys, but I'm going to cut it short today. I wanted to keep it right at an hour, and we are at 1 hour. I didn't expect a ton of people to tune in, but hopefully people have the opportunity to kind of check out like the weekly wrap up over the weekend, and hold you over till Sunday, at which point in time I will obviously be streaming on Sunday, live stream 8 p.m. Eastern Standard Time until 10 or 11 p.m. Eastern Standard Time. So appreciate everybody that showed up today. Thanks, guys. Everybody enjoy your weekend. Have fun trading cryptos while the stocks are closed. And we'll see what happens next week. I'm expecting quite a bit of volatility and, probably just continuation with all these trends. So well, there you have it, guys. Crypto trend trader. This is not financial advice. I'm not your financial advisor. These markets are extremely volatile. Please do your own research. Trade responsibly. Man, everything looks bullish, honestly, but the dollar. So stay strong, stay long. Crypto trend trader, and I'm out of here.